Merhaba.
Hi. Welcome to the success stories in green bond issues of this Congress. I would like to greet you all on behalf of the panel, and I would like to thank the association for their organization and invitation. We've got Kuwait Turk representatives, investment bank, and the advisor of development of finance from Turkish Industrial Development Bank and Kuwait Turk Participation Bank and Development Investment Bank of Turkey. And sustainable finance with a holistic approach and the financial markets change story will be the starting point of the discussions and deliberations. We've been recently hearing about green financing, climate financing, responsible investing, non-financial reporting, green and blue bonds, impact investment, impact reporting. These are new approaches, new financial instruments that keep appearing on our agenda, as you know. And this agenda is in fact, this is the outcomes of a transformation and change that is occurring across the financial markets in the whole world. A new order, new industry, or Industry 5.0 are some of the names, or a transformation in the financial markets is our agenda. But what triggers this change and this transformation? As we all know, our planet is going through a climate change, which is the main reason behind all this change. And the climate crisis that is associated with global warming causes disasters, epidemics and pandemics, floods and droughts, wildfires. Such climate-related risks do not affect human beings and environment and the society, but also the functioning of economies and the stability of economic markets as a threatening factor. And associated with these threats, a new order is emerging and developing in the capital markets, in the financial markets. Sustainable financial approaches are gaining impetus. And accordingly, the Paris Climate Convention and transition to low carbon economy emerge across the world as a means of struggling against this. And the financing of transition to low carbon footprint is presented and introduced as part of the solution, and enabling financing is a very fundamental issue. And the policymakers and the international development banks consider this as a priority in the change and transformation. And low transition financing to the transition for low carbon economy, it is not possible to enable it with public financing and state budgets, and therefore private financing is mobilized, which brings about new methods and new modalities, which in turn brings us to success stories in green bond issues. Since 2016, in capital markets, our development banks, public and private financial institutions, and through real sectors, they have made green issuances in Turkish liras and foreign currency, which were successful. And on the other hand, the Capital Market Board had a borrowing instrument markets development mechanism steps were taken on November 3, as well as to instill trust in investors through a transparency mechanism. And this was a draft regulation which was presented to the public opinion. And at the end of this is planned to be implemented by the end of the year. And within the scope of this vast framework, I would like to give the floor to the other representatives of participation banks. Ms. Seçil, I would like to begin with you. As an development investment bank, what is the sustainability finance situation, the current situation's potential? How do you see it? And can you give information about issuance? Capital Market Congress, I hope, is successful for all stakeholders. And I would like to thank you for this important panel. This is very important. This is very meaningful. And I would like to greet you all. As the development bank on sustainable development, both on the conventional loans and on the capital market instruments, we play quite an active role. So the consultancy services and the issuances, sustainable bonds, transition bonds, and various innovative products under the theme of sustainability. We design them, we structure them, and we issue them. And as a bank, this year, we have had the first social bond in Turkey, which also is the first sustainable bond for our bank. So as a priority, our missions, in addition, as a development bank, and what are we doing on this side? We have a past of 46 years. On 27 November, we will be celebrating our 47th year. Sustainable energy, energy efficiency, and conventional 3 years ago, there was a law change, and in that area, there was a competent individuals who were focusing on analysis and who worked on capital markets. And we worked on structuring, designing them, and bringing them to Turkey and creating the legislation. We're doing our best. Across the world, green financing and green issuance is very important recently. Green and social borrowing instruments awareness has increased, and last year there was a record-breaking amount of issuance. In 2020 globally, 295,000 US dollars green bonds, 164 billion, and a total of 627 US dollars of sustainable bonds were issued. This a total of 1,744 of them, 80% of which are green bonds. And these are very important figures, and they are going to increasingly continue this year and next year as well. And all the developments in the world and the steps taken in struggling against the climate crisis, as well as the extreme weather conditions in our country as well, brought us to a newer level of awareness. And as far as sustainability, impact investments, and the steps to be taken in climate struggle, we started designing various products. And as you know, the financial industry, when financing impact investment, both conventional products as well as green and social issues, we played a very active role. And impact assessment side, that is in struggling with climate crisis, the financing leg will also play as important a role. And all of these impact investments, as well as the steps to be taken in the struggle with climate crisis, will require a significant financing. And even if it's at a limited scope in our country, the real industry, we pleasantly see their issuances. There are two real in the sector issuances last year, and we were very happy to see that. One of them received 4.5 times demand, 350 billion US dollars, and there was a competitive interest rate. And as a development and investment bank, there are two products that we have designed. One of it is our own intermediation. It was the first transition bond in Turkey, low carbon transition. We mediated the transition to low carbon economy bond, and the design of it was very important. We created the framework for the transition bond, and the ICMA as green bond principles and the Islamic Development Bank sustainable financing principles were taken as the basis, and UNDP Istanbul International Private Sector and Development Center shared with us all their global practices, contributing significantly to this framework. And in addition to it being a first in Turkey, one of the most important contributions for capital markets was that it included a detailed impact analysis, because in general, green sukuk, green bonds, green products, this impact analysis and calculations are not given in detail in general, but with the third-party reporting, we gave this in quite a big detail, and there was a 200 million Turkish lira private sector issuance, the investments that they would do, 1.9 million tons of carbon emissions would have been prevented with a third-party report, which was a very important development, we think. And also examples like this, as well as various products, social sukuks, etc. It's not about green, renewable energy, energy efficiency, or reducing carbon emissions, but on the social side, it increases employment and it touches different social themes. And those products will continue to be developed by investment banks. And as a bank, in the social sukuk side, just like I said, this is in line with the international standards, and it has a social character. And the IGMA social bond principles and LMA social principles are the compliant principles, which was confirmed by an independent entity. And in the report that was prepared, this issuance of 50 million Turkish liras, the social sukuk issuance, and the UN SDGs, 6 of them are being served through this. And in the subsequent days, both as a development bank, as an issuer, we will be continuing this. And on the investment bank side, there will be different innovative mechanisms, any kind of mechanisms with impact on sustainability. This could be also different products, hopefully we will be completing many others, and we will be intermediating, and hopefully we will be giving these to our markets, and we will have significant steps in terms of sustainability. Thank you very much. Thank you for your valuable contributions. Green bonds, green thematic products is the first segment, and we listen to social sukuk and social issues. And this makes us very happy, and hopefully it's going to constitute an example, and we will see the effects on others. And the first issuance, Turkish Industrial Development Bank's development financing consultant, Mr. Coşkun Kamberoğlu, currently in sustainable financing area, from a perspective of a development bank, the capacity or the potential, how do you see it? And the markets development, how do you follow this? Thank you very much. I would like to thank the Congress, and I would like to thank you for inviting me to this distinguished panel. The Turkish Industrial Development Bank, as you know, as its development bank, it doesn't collect savings, and therefore, in order to support Turkey's sustainable development, the funds are collected from international markets as well as other international and supranational funds. And the Turkish Industrial Development Bank has had collaborations with the World Bank and many other banks. It provided thematic funds and financing investments in Turkey. In the beginning of 2010s, we made a strategic decision, and we said it's not only the funds, overseas funds, but also to expand the funding criteria, we wanted to issue bonds. And in 2016, the Industrial Bank received a culture from the World Bank, and it was an environmental and social sustainability practice. And in 2011, we made the first sustainable green bond issuance in Turkey. And the progresses that we have experienced and the topics that we have encountered, let me briefly explain them. I prepared a small presentation. If it's all right with you, I would like to share it with the audience.
Şimdi yeşil bono, sosyal bono veya
green bonds or sustainable bonds or transition bonds. Well, before diving into that area, let's focus on the constituents of sustainable finance. Well, this is a great chart that is quite informative and explanatory. You're looking at the subcategories of sustainable development, and green finance or green bonds that we're discussing here mainly focuses on climate change mitigation or climate change adaptation or financing other environmental issues. But before sustainable finance, let's focus on social aspect of it. What is it? Employment, gender equality, social infrastructure, meaning financing of education or health, and bonds issued in this respect. But sustainable finance is like a clutter here containing both of these domains. So sustainable bond actually includes this social and environmental bonds as well. Looking at the bond issuances globally, as you can see on the upper left, there is a great increase in green bond issuance. And taking a look at the figures, you will see that, for example, in 2020, it was around 490. And the majority of the bonds were for infrastructure or transportation. And looking at the 2021 bond issuance per month, well, 2020 was a record year, but in the first 10 months of 2021, there is a 95% of an increase. So green bond issuance actually increases tremendously. But what is the situation in Turkey? Well, first issuance realized in 2016 with $300 million by TSKB and Renaissance Corporation. And in 2021, we are looking at $3.2 billion. And figures might change slightly because I tried to collect data myself. So there might be some missing figures. I'm so sorry for that. But you're looking at a trend here. 2021 has been a year that brought an increasing trend. But it's not just limited to green bond. In 2020, we were expecting a 500 million, but in Turkey, we issued 1 billion alone. So there is a great potential. So why did the TSKB issue a green or a sustainable bond? Our ultimate target here was to diversify funding mechanisms. But what other purposes did we have? we wanted to become the first issuer in CEMA and Turkey because we are a development bank and we are obliged to be the leader in some areas. So that's why we carried out necessary researches and made it a reality. Of course, we wanted to have access to new investors and we wanted to expand our investor base because in conventional instruments, you always focus on the yield, but new investors focus on impact. So that is why a side benefit was to expand the investor base. We wanted to have a positive publicity in the eyes of the stakeholders. We wanted to present TSKB's role in sustainable finance, and we wanted to extend more loans to environmentally friendly projects in Turkey. So in 2016, we had our first issuance with a worth of $300 million for 5 years. And this took place in late April. And the market conditions were not that eligible for issuing bonds, but it was going to be the first, and it was great in terms of its inclusivity. So we received 13 times more the interest and the attraction that we anticipated. And the use of proceeds were energy efficiency, resource efficiency, clean transportation, climate change adaptation, renewable energy, electricity distribution, and social infrastructure. In 2017, we issued again the first and it was a tier 2 bond, and again the demand was perfect, and 115 out of 117 investors were new investors, so it was quite attractive. Looking at the eligibility details and the eligibility criteria, well, we completed the entire issuance process in 28 days, which was quite fast. And the last bond was issued in October 2021. It had a maturity of 5 years worth of $350 million US dollars. It was the first Euro bond out of Turkey, and we received an oversubscription of almost 6 times more. Well, all these issuances brought us many awards, actually. In 2016, we received an award as the best SRI bond of the year. And we were listed among the 3 nominees, along with Apple and Starbucks, for Global Capital's Green or SRI awards. So these are the technical steps. This was the process for sustainability framework preparation. We needed a second party opinion, and we chose to continue with Sustainalytics. But of course, there are many different other companies that can successfully offer second party opinions. The second step was the use of proceeds. we had to determine the project categories. Our two main categories were tackling climate change and sustainable social infrastructure. Of course, we had to set subcategories too, like renewable energies, accessing to essential services, access to essential services in both health and education, etc. And then, of course, we focused on the eligibility criteria, and we had to check for international principles and compliances. For example, in renewables subcategory, if this was going to be a wind or a solar, would be determined in this step. And on this step, International Capital Market Association has set standards, and they renewed it in 2021, and they update it whenever necessary. So determining whether it is a green one, a sustainable one, or so is identified after completing all of these steps. So, Mr. Coşkun, well, selecting project is quite an important aspect, but let's leave it to the second round. And you walked us through on bond issuance, but sukuk is on the rise too in terms of sustainability, and it is increasing its share. In fact, with sustainable finance approaches, the participation banking principles actually overlap, and they are in a great harmony. So it is widely accepted that there is a great potential here. Together with us, Executive Vice President of Kuwait Turk Participation Bank Treasury and International Banking, Mr. Ahmet Albayrak, you have a similar experience actually. What were the characteristics of that issuance, and what is the potential of leasing certificates, and what are your expectations in this front? What would be your messages? Well, thank you, Ms. Seçil. Well, before everything else, let me thank for the kind invitation. It is so valuable for me to represent a participation bank. Well, actually, our works on sustainability started before the issuance, because participation banking or development banking or other banking should focus on the on this common solutions that all humanity faces. And it dates back to 11th century, actually. Imam Ghazali said in the 11th century that, and by the way, his definition is all over the textbooks. The purpose of Islam is to ensure continuity of life, property, mind, and the faith itself. So back in the 11th century, he actually gave us a framework that is so similar to UN Sustainable Development Goals. And his quote can be written under 5 goals and 5 categories. Of course, they are not 100% similar. There are differences, but UN Sustainable Development Goals and Islamic finance are quite parallel to one another, especially in terms of its founding principles. And in addition to that, when you think of conventional banking and participation banking, well, they have a distance, but what might bring them together is a new approach in banking. So sustainable banking or related instruments are in a way bring two banking notions together in order to meet the needs and the calls of humanity. Well, like I said, our works started in 2011 with a focus on sustainability, but tier 2 sukuk had to be sustainable. Well, we questioned the eligibility, the feasibility of it. And immediately, just like other speakers, we consulted the second opinion providers. And we went for a regulatory authority and we received counseling. And we assessed our portfolio. And we realized that almost all of our credit portfolio, I mean, more than 8% of it is sustainable, meaning it was green or social serving funds. Around $800 million to 1 billion Turkish liras worth of funds were already eligible, but we never used those funds while issuing. But together with the issuance, the fund we received all the present funds actually guided us to make the most out of them. So just like development banks or other banks, we wanted to focus on green energy, clean energy, stopping pollution, treating pollution, clean transportation, green buildings, or energy efficiency, or supporting employment in especially social issues, or supporting SMEs, supporting women and youth, and them being present in the administration or the execution of all those SMEs, or financing residential projects, providing financing to health and education, were all the areas that we focused in our use of proceeds so that we could determine where we would benefit from these funds. And we have two sides, actually. On one side, there is this green bond or green sukuk, let's say, which are sustainable, and it brings you two liability. One of them is financial liabilities, especially in markets or in capital markets. You have to fit in them somehow. And also, this incoming fund should be limited so that they will be used appropriately. So you would need a balance on both fronts. Well, we had a tier 2 sukuk issuance of $300 million back in September. And just like Mr. Joshkin stated, we received 12.2 times the demand we expected, and 6.5 basis points was the initial price. And then there was a withdrawal. So from 5 continents, meaning 150 different investors demanded this bond. And what's beautiful about it is that it was close to $4 billion, but $150 million of it came from overseas funds. So the demand coming only from the sustainable funds could help us successfully complete the process for bond issuance. But for example, GCC is a market that we always borrow from. So we wanted to receive and process the demand coming from other sources. And this is how we distributed sukuk, and it was quite successful. And frankly, at the beginning, I didn't know that it would be this big.
And the Turkey Participatory Banks Association Union, and also through the same bank, in order to create an opinion for us, my colleagues and myself, they played a leading role in terms of participation banking, and our activities within our own bank are also continuing. And that's only on the sustainable finance side. About climate change, the activities that we have carried out in our organization, particularly about digitalization. And I don't know, maybe other members of the audience knows about this. There are close to 200,000 customers for whom we have opened accounts without coming to the branch at all. And this, they are a part of financial inclusion and financial literacy to ensure that more people can enter the financial system. This is very precious for us. And also our own personnel's happiness, satisfaction, and their loyalty and engagement, loyalty to and engagement with the institution. They are also important pillars of some of the important pillars of sustainability. And we were the most important financial employer in Turkey, but we have been awarded as the best employer in Europe this year. So this is in our essence, these are giving us hope on our way to becoming a sustainable bank. I believe that this is going to increasingly continue. As I said, these activities, be it on the conventional side or on the participation bank side, as our minister has also explained, a Green Deal strategic plan, the framework, as well as the sustainable banking roadmap, as well as the Treasury's most recent, they also came up with a framework for sustainability, and they also are focusing on, they're about to start issuing sustainable sukuk and bonds. And if the state is also on board, both on the sukuk side and on the bond side, this is a growing ecosystem. This is a growing market, I believe. So this is all I have to say in the first round. Thank you very much. Starting with your philosophical assessment, the humanitarian, social, and environmental dimensions of the finance sector. And thank you for all these, for your examples. And the issue of sustainability is it brought us a new approach, a new perspective. And for those who are new to it, it might be a bit surprising to hear it, but it added some spirit. It's not only about the financials, but also about non-financial indicators. This is the World Economic Order and reporting liabilities and financial mechanisms. And we are trying to understand those mechanisms. All the company representatives, they talked about the advantages in these issuances, reducing the capital costs, access to new investors. And the creation of this and accessing these benefits is great, but in the background, there has to be a set of preparations. In the beginning, you identify a sustainability strategy. You've got various indicators, performance tools, indicators. And Coşkun, you were talking about green projects when you were identifying them with your bank's development strategies. Do you have a portfolio? And also for the real industry companies, what kind of a change can there be? Because there are so many, they may not opt for that many project financing deals. So how would their preparation stages differ? In the preparation stage, the real sector's job is a bit easier because if in the business activity that they are offering, the eligibility criteria or the use of proceeds definition is relatively going to be easier compared to the banks, because in order to offer a flexibility, they would finance projects of different types, from renewables to energy efficiency, from environment to gender equality. This would be a huge range of sustainability bonds, and then using them fast and reporting them would be much easier, but it will have an advantage in the sense that in the real industry, imagine if a construction company is building a hospital, and if there's a bond issuance for financing that hospital, the use of proceeds and the eligibility criteria would be specific to that hospital construction. The system would be easier and would be easier to explain. But in the issuances of finance industry, as there is a vast scope, issue can become more challenging. And as you have mentioned, the financial institution to issue its sustainable infrastructure, its policies, its procedures, its strategies need to be fully in line with the expectations of the investors, and the environmental and social assessments have to be proven that they have been completed to meet international standards. It's not only the second party opinion providing entities, but how you explain yourself and how you do that is critical. And during these issuance processes, the expectation of the investors is that the projects that you're financing with your own portfolio, you're not expected to include them in the bond issuance. 40% should come from the existing portfolio, but 60% would be as in the form of commitments for the future projects that will be completed with the proceeds to be received from these. And there are certain differences in how they are presented. For instance, sustainability management structure and practices of the issuing entity is important. And if you've got green or sustainable bonds, the performance needs to be explained very well by you, because the previous performance will also be an indicator about the product that you will be issuing. So the previous products that you have issued need to be reported well, and you need to prove that you have been managing them well, and how much of the bonds you will issue will be related with the existing projects and how much about the future projects. This needs to be explained very well to the other parties. And compliance with international standards is very important. Compliance with LME standards, IGMA standards are some of the critical issues, as I have mentioned. And also, I want to talk about practice and practical issues. The funds issued need to be monitored effectively as an institution, and until all the amount is addressed to the investor systems, we are keeping it in a special account in the accounting system. So the bank is allowing transfers from this account to projects that meet the criteria and eligibility conditions, and we're keeping them in a special account. And sometimes there could be such projects that the investment and the financing could be very high, and only some of it could be funded from sustainable bonds. So addressing bonds in the amount you have financed it is critical, because as the Turkish Development Bank Sustainalytics we want them to verify the projects. We wanted them to review the projects funded through the proceeds obtained from those bonds. And to get a full verification, PwC is also asked to verify the accuracy, their compliance with environmental and social standards and internationally accepted norms. And the investor views this as a positive practice. Microphone, please. The translator cannot hear the speaker because the microphone is turned off. Microphone, please. We apologize for the lack of interpretation because the microphone is turned off. We want to grow the market, increase the investors' trust, and we drew a framework and we presented this for your opinion. So in this round, I would like to take your opinions. Let us start with Ms. Seçil if you want. Of course, this is quite positive. The guidelines that is a draft, but also in the meantime, I would like to tell you that this is very important for standardization. And the most important thing that it will bring is on the investor side and on the issuer side, this is a very meaningful incentive. The fact that it's being done by international standards. And of course, the investors are incentivized for issuance. And this is very important, as well as the issuers and the investors. This is an increasing trend, but this is limited in our country. And one of the main reasons is that the legislation was not available much because everyone, of course, had very great intentions, but as it was a standardized process and the verifications were done fully. And as for the IGMA standards, and the LMA was taken as the basis, and that kind of an issuance was it is going to bring different investors for TL issues. In the sustainability context, there was an awareness that increased, and in the individual investors, the legislation, rather than the legislation and the standardization, this will be very effective. But such a standardization, of course, will have to do with the right assessment of the investment they have made, but their own scoring, sustainability scoring, will receive significant contributions from them. And we find that very important. But also, with your permission, can I talk about the others, what we expect? We see that a lot in the international arena. And sustainability-related products are very much necessary, and we should contribute to that. And from a cost standpoint, even when you're issuing a conventional one, the cost associated on the issuers is much more different compared to conventional ones. And in addition to those costs, there is the verification and the reporting of the impact analysis. And processes like this, or the second opinion related processes, bring about different costs. And we see examples overseas about these costs. And also there could be additional costs on the regulatory side. And this has been designed extremely well, and therefore I would like to thank you as well. Different incentive mechanisms can be formulated for these costs for the issuers, and on the investor side, for the investors that buy these, sustainability or struggling against climate crisis doing this all together. This needs to be done on a global scale as a strategy. So when you do it alone, the European Union Green Deal is very important because all the stakeholders are attempt to be drawn to the same playing field. Likewise, limited carbon taxation as well. It's to discipline the entire world. And we might see similar such issues where these funds, these issuances, for the portfolios that hold them in their portfolios, there could be certain international incentives, such as the carbon certificate. They can play such a role. And the ESG scaling or scoring could have different meanings at a global scale. So a local sustainable bond or sukuk could have a meaningful contribution in that scoring, and that will be an extra incentive. There could be incentives for keeping them in the portfolio. So when all of these are coupled together, I believe that people and companies will opt for these rather than conventional borrowing, and we will have created resources for the financing of these impact investments, and the capital will be spread to the base, contributing as necessary to sustainability. And I would like to thank you as well, because this legislation, which is currently at the draft stage, as Mr. Minister has explained in the morning, this is expected to be introduced this year. This is very valuable, this is very important, and hopefully starting from next year, these issuances will increasingly continue by multiples. And like you said, incentives can be contemplated within the regulatory framework to steer the market and to regulate the market. But this global approach to corporate investors, just like the case was in the carbon market, can of course bring about different impacts. The Green Deal Action Plan, as well as the Economic Forum, is emphasizing the incentives, and the activities for likely incentives will continue. Yes, Mr. Ahmet, I agree with Ms. Seçil, the Green Guide prepared by the CP Capital Market Board, and also about the other incentives, both on the supply side and on the demand side. I believe that it is necessary to provide these incentives. What the investors will say, such as withholding tax, or and the KKDF fund, that could constitute an incentive on the public side. But on the private pension, on the pension side, there is a fund size that reaches 200 billion. And I believe that about 15 billion of it is kept in standard funds, because the beneficiaries haven't made any preferences. So for these private pension funds, green funds or green bonds and sukuks might have certain obligations in order to incentivize this. And in the OKS system, there's a different standard, such as 15 billions, but 12 billion of it are almost 12 of them. And for GSFs, which is the livelihood capital fund, which is a 20 plus something percentage points of obligatory investment. And there could be other obligations about sustainable funds. So there could be a strong impact both on the supply and the demand side to at least create an awareness. You're right. This issuance is not something that could be driven by the company's issuance. The costs must be supported by the entire ecosystem to carry the structure further ahead.
Üzerine çok fazla bir şey söylemek.
I don't know what is left to say after Ms. Seçil and Ahmet, but as a regulatory authority, sustainable bonds and green bonds are great, both in terms of investor confidence, but also the issuers will set standards. They won't be acting upon international standards, but acting upon the standards of the regulatory board, which will be a great relief. And like you said, green bond issuance is great both for man-hour, and it is a bit complicated, but the yield, the return is great. Maybe in the future, we will wake up to see that conventional bonds will bring about additional cost, or because the demand is low, their calculations or their results might be completely different. But of course, there have to be incentives to cover the cost of green bonds to a certain extent, which will also support investors. And I would like to extend my sincere thanks to CMB. Well, this is the last 3 minutes of our panel, but do you have any final messages? And also, for exporting companies on different sectors, for example, like energy or infrastructure or transportation, what lies in the future for them? Well, actually, I want to add something. Within this Green Deal, some specific sectors will see a different picture, especially iron, steel, cement, and related sectors will be affected by this carbon initiatives. So they have to be swift with their transformations because, as you know, there will be an introduction of practice in early next year. So they have to focus on different borrowing instruments, and they have to make the most out of both sides. So next year, when it comes to sustainable financing, I believe our country will experience a brand new era. And once again, with the opportunity, I would like to thank you for organizing quite an essential Congress. Well, thank you so much to all panelists. We discussed the sustainability of our markets as well as the development of our borrowing channels and instruments.